Hello traders, Gary Wagner here, just about 10:25 in Honolulu, 4:25 in New York. It is Wednesday, October the 5th, 2016, and this is the Daily Report for Gold and Silver. After falling from grace yesterday, having a dramatic drawdown, silver down about 5%, gold down about, I believe, 3% on the day. We have not a recovery, but some stability in the market as we see the market having flirted with unchanged to slightly higher, slightly lower all throughout the day. It does appear as though gold is going to close off on the day, but off fractionally lower, off 75 cents at 2167.41. That is our current print. This, of course, is spot. The low today, 62.33 with a high of 77.16. COMEX at 1269.70. As you can see, we are really flirting with unchanged to slightly lower on the day. Currently one tick up a dime with a high today of 1279.40 and a low of 64.10. I absolutely see some opportunities now in the market. We are at a critical fib level, and we'll talk about our strategy as we look at our first chart. Let's take a look at silver first. Silver trading higher today, up about 3.5 cents, as you can see, at 17.81. It's traded above $18 at 18.04, and the low today, 17.58. So we've seen some continued volatility in silver, more stability in gold. And then lastly, when we look at spot, again, fractionally unchanged, this showing down about a penny on the day at 17.76. Let's take a look at our first chart, and I'll talk to you about our current strategy. So traders, absolutely no doubt, an incredible sell-off yesterday, gold plunging over $40 per ounce, breaking through a major level on a technical basis of support. That level was roughly at 1308. Let me draw our line in here. And in essence, what that is a 38% retracement of the move from approximately $1,200 up to $1,375. When that happened, we had a substantial rally, and from that rally, we then defined really a range in which the market had been trading in, unable to either breach the highs and make a new high or breach the current lows and make a new low. And that's the area that I've just highlighted in green. We can see that on a number of occasions, such as right in here, to some extent here, but definitely right here as well as here, we had the markets come down, test these lows, come down, test these lows, come down and test these lows, only to find some really solid support in the market at this particular price point of roughly, call it 1,300 to 1310, somewhere in that area. That was certainly not the case yesterday. We had a clear and defined breakthrough, a breakdown in price, so to speak, as this market not only traded lower, but actually traded to our next really critical level, which is 1266. That is a 61% retracement, and it's a 61% retracement of the same move. Now, that move, I believe, might have been a little bit overdone. That's yesterday. Today, while we're looking at the market trading up 20 cents, as I said, it's fractionally unchanged, and we really want to go ahead and, with that in mind, kind of blow this up a little bit. Let's go ahead and kind of enlarge it. There we go. And what you can see when we do this is the fact that, yes, today we did, in fact, make a lower low. No doubt about it, we made a lower high. It would have been hard to make a higher high on the day. That's not something we're looking for. And this low that we're looking at right here came in at 1264. So it absolutely breached through this particular price point, and that didn't surprise me because my sense is that this is an area that we want to look at to actually put a trade on. And now that we have this defined low in the market right here at 64, we know that we need to place our stops below that point. So in terms of risk factor, it actually becomes a lower risk trade depending on what we see. Now, what are we looking for? Obviously, we have the right fib level to actually look for a particular development in the market. And that development is really a key reversal. And as you know, for key reversals, I look at candlestick patterns as one of the primary techniques to actually guide us and pick target points for exit as well as entrance of trades. We use the fib levels really more for technical levels for stops, support, and resistance levels. But we would look for the following type of pattern. There's a couple of different patterns we could get, but one of them that we would look for would be a three-river morning star. You get a long red candle after a defined downtrend. First criteria to meet and develop this pattern. We absolutely got that. Second thing that you need to see on this kind of a pattern development is a star, a small-bodied candle, which is gapped either below the lows of the red and green candle or at, depending on whether you're looking at COMEX or SPOT. On SPOT, of course, because it's a continuous market, it would be at, but you can get it below on COMEX, which is what we're looking at. We certainly didn't, but we certainly got it at that price point. You can see that right here. So that, to me, is a good indication. Now, we have one more really important component to actually say that this is the candlestick pattern that we're looking at, which means that tomorrow, on Thursday, we would need a green candle with a higher high and a higher low. Now, you can take the call there, but typically what you want to do is to get a confirming candle. And so this would be Thursday. This, of course, would be Friday. And depending on what we see, of course, the market can break down and continue to trade lower throughout the week. And if that's the case, so be it. We know that we'll wait for the next logical point to get in. However, if we do get a recovery tomorrow and we get that nice green candle, and then in overseas trading on Thursday afternoon here in Hawaii, of course, that's Thursday evening on the mainland, and more in the evening, the closer you get to the East Coast, we get some really strong moves up, especially if we get a green candle, and then Friday's, or I should say Thursday night for us, but Friday morning takes out this high. If we get that higher high coming in, that is going to trigger a buy signal. Our stops are going to go below here, and traders, I think we could have an excellent trade underway. Now, of course, all bets are off if, in fact, this particular price point doesn't hold and we see it drifting back and really flirting with these lows. If that's the case, we will sustain from buying. We might even look to implement a short, because a break below this could signal dramatically lower prices. We'll have to see how this unfolds, but traders, I'm excited about the possibilities. So traders, when we look at silver, the potential of a pattern forming such as a three-river morning star is just as acceptable and just as available in terms of what we're looking at, because what we have seen, of course, is this long move down, long red candle, and a star gap so far. If we see follow through tomorrow, meaning a green candle with a higher high and higher low, that would also signal it. As I said just a second ago on our gold analysis, we would probably want to see a confirming candle such as this, and it would look something like this. Now, unlike gold, which really fell to an exact 61% retracement, here we're looking at a 50% retracement. Our 61% retracement, because of the way silver moved, doesn't come in until 1725. Our 50% retracement comes in at 18. So we are absolutely kind of at mid-ground in terms of a fib level. And then so what we would have to do is to look at historical data to see where these lows really kind of match up. I'm going to try and line this as best I can. That would be this top here, obviously, and this top here comes in really at the 50% retracement level. So we're below that. It's an exaggerated move, and so on a technical basis, I wouldn't even look for support till about 1725. So if we do make a call on this particular market, meaning silver, we want to be careful where we place our stop. I'm not convinced, as I am in gold, that we've hit a bottom just because of the way that it broke below that compression triangle. But let's see how this market unfolds and then react from the technical data that is available. Of course, Friday we do have a jobs report coming out, so I have to see what happens. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.